Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the Australian dollar rallied to a 2-month high, which was near the 68 cents objective, before pulling back slightly after the release of the US PPI number, which updated expectations that the US Federal Reserve may slow the aggressive rate pace that we've seen now for 6 consecutive sessions this year, which have included 4 supersized moves of 75 basis points. In annual US PPI, inflation rose by 8% versus 8.3 estimate in October, slowing down from September's 8.4 increase, and again providing a deceleration in inflation after last week's light CPI data. In today's economic data, the Australian Bureau of Statistics released the Australian Wage Price Index, which rose by 1% versus a 0.9 forecast, and prior to that was 0.7. However, there has been no immediate reaction from the release. Nevertheless, the market is still poised for a further uptest as the ADX is trending, and therefore could see that challenge once again anywhere towards that 68 cent before profit taking emerges. As we can see, the euro did pick up momentum overnight and stabbed through that objective of 103 and nearly claimed the 105 area before pulling back, all on the back of the release of the US PPI number, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped towards 106.30-35 area after the number. Looking ahead though, we've still got a couple more figures to be released, and therefore could see a little bit more whipsaw price action, and that is with the retail sales in the US. Along with that, the euro at present is not backing down, with the ADX still holding to a somewhat bullish trend, and therefore could see another test to that top side, not a stab but a challenge, and maybe even holding around that 104.5 to 105, and then maybe some profit taking may emerge from then. Having stabbed at the downside for dollar yen, the market is still finding initial support roughly around that 138.60 area. All eyes now look to the US retail sales data later today, with the monthly data expected to be higher at 0.9% versus a release of 0%. Technically though, there is still, I feel, further weakness to come for dollar yen, and therefore looking down towards that bottom side of the range, as mentioned, around 136, and reassess from there, with the ADX also trending to the bear case, does support that view. Sterling, well, the market did stab at the 120 area and backed away slightly, but still likely to hold to initial bullish bias from a broader sense, but we could see a little bit of a weak play into the European session. That is towards 118.25 and a base short term at 117.70. If we do see a pullback, it may give us opportunity before the next step to that top side challenge of 120. All eyes will be looking towards the UK inflation and also the Bank of England's monetary policy announcement. So keep an eye on that as well. The outlook for gold did briefly touch that top side of 1,784 to 88 and was respected. And from that challenge, we're seeing a little bit of a weaker play coming in. The market was a little bit more towards safe haven interests following an unconfirmed reports that 2 stray rockets believed to be of a Russian origin crossed into Poland, which is a member of NATO. However, the incident marks the first time that Russian weapons have struck NATO's territory. Nevertheless, with safe haven demand back into play, keep an eye on this top side, because if we do see a break of 1,788, then that would look towards 1,820 to 22 as an initial target. But as I said, we're getting a little bit of pullback, but the ADX is supporting a bullish case, so dips can be as low as 1,756 to 58. But however, I feel a shallow pullback and another test to that top side. Wrapping up with oil, as we can see that the market took a challenge to that downside level around 83.70.90 and was rejected, but not actually out of the danger zone in terms of supply emerging, as we are seeing a weaker play into the afternoon session ahead of the European session, and therefore could see a challenge and a break of 83.70.90 would give further scope towards 79.80 as the next target. Well, that wraps it for today. Thank you very much for joining me. As always, look after the intraday report, and I hope you enjoy the great start to the day.